Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 15, 2022. Hope you're all doing well. In today's segment, let's take a look at rock solid profitable stocks to buy, taking advantage of this market-wide sell-off. I got a great company here. Look, we got Edward Life Sciences. It's a medical device play, a great stock. Stock has been dropping off late, but a profitable company. Let's look at many stocks like Edwards and see if it's worth buying up here at the rock bottom price and go from there. All right, so we'll start with a quick market update and then we'll look at top stocks to build wealth. This is where we look at the solid stocks with the sales growth more than 10%, profit margin more than 5%, and free cash flow more than $500 million, and also cash on the balance sheet more than $1 billion. Then most of you have been asking me about the options. We'll talk about few option spreads here. We'll talk about call spreads as well as put spreads and see how to benefit from those spreads here. I love spreading techniques because you don't need to have too much money. At the same time, you can generate a good profitability. We'll also do a quick conclusion and go from there. All right, so we'll start with a quick market update here. Look, from a market update perspective, we are in the extreme fear zone right now, and we don't last in this extreme fear zone for a long time. We'll slowly start making our way higher into the fear zone, and stock market will start going higher. That's why when we're in the extreme fear zone, it's always good to put the money to work and buy some rock solid stocks that we talk about today. All right, now let's jump in here and look at the market. Look, from a market perspective, we had been dropping off since April, as you can see here. Down, big time down. All these major indices are down here, and we got one nice green candle here in most of these indices here. That doesn't mean we are out of the woods, but there is some hope that we may go higher. We got to be careful here. That's why we always look at rock solid companies and buy them, and you are rest assured these will go higher as the market stabilizes. So with that, let's also look at the gold here. Look, gold has been dropping off late. I love gold at these levels here. I'll be buying some gold as well as some gold stocks. Crude oil is pretty strong here. I would not buy it up here. Let it settle down. It gives you good opportunities, as you can see here. It's good to wait for a slight pullback and then buy crude oil. And look, bonds are selling off here. Slight uptick here, but it will sell off again because Fed will start tapering down and sell their bond holdings. Interest rates are going higher, as you can see here. That will have some impact on the stock market. We'll keep a close watch. All right, now let's look at major ETF for performance. Look, these are the great ETFs. At the top, we got SPY, S&P 500, one of my favorite ETF. Look at S&P 500. Look at the IV percentile here, 72. That means you can make some good money selling put option. I've been doing it for a while. It's a great one to sell some put option at these levels. Look, from a performance perspective, it's down 16% in from 52-week high. That tells you it's in the correction territory right now. And we got QQQ here, one of my favorite one here. I also do put option selling on this one too here. Look, it's down 26% from 52-week high. And look at the IV percentile, very high IV percentile. That tells you can make some good money selling put option. Also look at the put call ratio here. It tells you in all these ETFs here, there are more put option buying going on. People are afraid they're buying put options, and basically they're hedging to make sure if these go down further from these levels, they will make money. But we can always make some good money selling put options to these guys because they're afraid, and we can sell put options at deep, way below current price at a good price and get some money that way. And keep watching put call ratio here. There are some ETFs where there's a very high put option volume here. Look, we got XLP consumer staples. Folks are worried it will go down. That's why look at the put volume here. There is a very high put volume in consumer staples. And same story, XLB materials. Folks are worried this will go down. they're buying put options here, and very high put volume here. And we got one more here, XRT retail. Folks are wondering it will go down here. That's why put volume is very high here. Put call ratio is 4.68. That tells you there are a lot of put options buying going on here, 4 times more than call option. All right, I also like some of these IWMS example. Look, there's also high put volume here, so you can take advantage of those things and get some money by selling some put options way below the current stock price. And what we'll do is, for many of you who are interested, I'll take you to Thinkorswim platform here. I'll quickly show you how to sell put option on at least one of these ETF here, QQQ, so you get a good idea here. All right, so with that, let's jump in here and look at Thinkorswim platform. All right, so we got our Thinkorswim platform here. Let me bring up QQQ here. QQQ is our famous ETF. It's a NASDAQ 100. Look, as you look through the QQQ here, we've got a 1-year chart. So if you want, you can expand it 2 years just to see how it's going. You can go to time frame here and say 2 years. So it's a 2-year daily chart right now. Look, stock market has been coming down, that tells you here, and we got a nice solid line here. That's a good support level, as you can see here. And if you want to go even below, you can even go below here. Look, right now you can take this support level or even this support level right here. That could be your another support level here. All right, let me get rid of this here. All right, so you can take this support level right here and go all the way here. Look, we got 275, nice support level here. You could try selling some put option at these levels and make some money. So with that, let me jump in here and go into trade tab here. So when I'm selling put options, I normally go maybe 45, 46 days out. I could go to 30 June right here. And sometimes, because implied volatility is so high, you could even go lower here. You could go 40 days out also. So let's do 40 days out here, and look, very nice put option premium here. You could even sell put options at very low, like 235 here, and just click and sell. You're making $121 here, and you're selling put option. Look at the probability of touch here. There is a 14% chance the price will hit 235 in QQQ by this expiration 24 July. That's a very good percentage here. I think it's very comfortable here. You could sell some put option here at the rock bottom price. There is as you can see, a very low chance, just 14% chance of QQQ hitting 235 by this date here, 24th of June. So I'm comfortable here. I will go and send, confirm and send. Also look here at the bottom. Thinkorswim gives you the price here. Typically you could get away by putting the mid price here. Right now price is 121. Because you're making money, you're bringing in the credit, you could go ahead and change this to 123. Normally Thinkorswim always fills at that price most of the time, so you could confirm and send here. Look, we are now confirming and sending here. So the moment you do this here, what's going on is, look, we are selling a put option for the price 235. Look, right now the price is $304. And if I go here and expand this further, right now it's let me cancel here and expand it further. There we go. So if I expand it further, as you can see here, the all-time low price in 52 weeks is 284, and we are comfortably below even that 52-week low price here. That's why I'm comfortable. We could sell this one here. All right, let's confirm and send here. As you confirm and send, as you can see here, we are selling a put option, and look, it's at 235 strike price. And the date is 24th of July right here, 40 days out of current day here. We got 40 days of exposure, and we're making $123. And look, our buying power effect. If you have a good margin account, you don't need to pay any money here. It's you can play with the house's money, and your buying power effect will be negative 2,350. you're not taking any margin for this one here, just the buying power reduction. So you could confirm and send here. There you go, confirm and send, done. So this is one way I play this game all the time, especially with my favorite ETFs. Like QQQ is one of my favorite. I also do that with SMH also. SMH is again a semiconductor ETF, like many of you know here. Normally I do it on down days when the market is down big time. I go even lower and sell some put option. Look, from a SMH perspective, right now it's 232. Right now I think it's a very good money, as you can see here. Normally I like to look at more open. Look, you could even go here at let's see here, 140, fine. You could sell some put option right here at 190 here, make some good money. Look, you're making $246, and as you see here, all-time low is 215. You're even going below that and selling put option. You could confirm and send here, and you're making $246. If this ETF comes down to this price here, 190, you can buy this, or you could get rid of this put option and go from there. This is the best way. I'll confirm and send here. This is one way you can take advantage of this this market volatility and sell some put option and make some money that way. I know a lot of people who do it very comfortably. All right, now look here. In one day we got all these major ETFs doing very well here. So that's why when you want to sell some put option, don't sell put option on a day when all the stock markets are higher. Instead, wait for the stock to drop off here. There are those days when there is 500 point down, 400 point down. That's the best way you can sell some put option on these favorite ETF. These are big broad ETFs here. You could make some very good money. My favorites are SPY, QQQ. I do it on IWM all the time, and then you got SMH here, great one to do it, and so on and so forth. I also do sometimes on XLV, which is also good here. You could make some good money there too. All right, now let's jump in here and look at month-to-date stock market performance. You get a good idea by looking at the month-to-date, how it's trending. Let's take a look here. From a month-to-date perspective, look, we got Apple down 13% for the month here. Look, it's a big 800-pound gorilla here. So when Apple is down like this, it's a good idea to sell some, basically buy some spreads here, call spreads, and make some money that way. And look, Google is down big time here. It's again a great stock. They own search, as many of you know here. Amazon is down big time. These folks have got some issue with the cash flow. They're a negative cash flow. Tesla is also up or down pretty big here. Microsoft, one of my favorite stock here. Satya Nadella is really doing great. He's taking cloud by surprise here. He's doing great. So look, by looking at this S&P 500, you can basically make out market, even though after this Friday's rally, it's pretty much in the dumps at this time here. That's when you can execute some strategies. We'll take a look at buying strategy for spread, call spread. You could implement such strategies on the down days. All right, now let's jump in here and look at the fear and greed index. I think we talked about this already, so we got to be careful. We are in a extreme we are in extreme fear zone. I will remove this. We already talked about this. We are in a very extreme fear zone right now. All right, now let's jump in here and look at the market and go from there. So market perspective, look, let's quickly take a look at the market here from a most active. This is on Friday, as of last Friday. Look, we got AMD here. Look, AMD is trying to bounce back, as you can see here. Very high, most active stock. I love AMD. I've been buying AMD on the down days. A nice swing here. It's a good one to even accumulate on the down days. I like Apple at these levels here. A lot of people panicked out and sold Apple. It's a good one to buy here. I'm slowly buying Apple. Also buying some call spreads also. And look, Twitter has been, it's in the crossroads with Elon Musk here. Musk is going to make them dance, as you can think of here. at these levels here, when Twitter falls down like this, I would buy some Twitter. Musk or not, the stock is will do well from these levels here. I think they will find somebody else if Musk wants to not buy, and Musk will probably end up paying a breakup fee if he wants to break up, which is about $1 billion. And I got a few more here. Look, I love Ford at these levels. You could buy Ford also on the down days here. Nvidia, one of my favorite stock here. You could buy some Nvidia. They can go higher after the earnings, just like how AMD did. And I got a few more. Bank of America is a solid bank here. You could buy this one up here and you'll make some good money. I like Microsoft. It's a great one here. You could buy some Microsoft here. Intel is struggling off late, but I think they can do long term well. You could put some money in Intel and just forget for a while. But if you want a bigger bang for the buck, I would rather go with AMD or Nvidia. They are the solid leaders. Intel is really lagging behind right now. And from a big winner perspective, look, we got big winners here. Typically, I don't like to go after big winners. I would wait for them to pull back here. I love stocks like AMD and even Nvidia and even SolarEdge for the matter. But I'm more interested in the big losers. That way you can, in the stock market, as we all know here, you got to buy low and sell high. By looking at this big loser list, you can find out which of these can do very well, and by those you'll make some good money. That's the mantra in Wall Street. Buy low and sell high, or buy high and sell higher. One of those two here. With that Twitter, I'm slowly buying some so that way I can make some nice position here, and this can go higher as things settle down, as you can see here. I also like CHRW. It's a great company. You could buy some. It's a good one here. And look, we got STE, one of the great company here. It's down here. You could buy some STE also. PNC is one of my favorite bank. You could buy some PNC here. It's also down, as you can see here. All right, now let's jump in here and look at top ETF to watch. I think we looked at this already, and let's jump in here. Now let's look at top stocks to watch. From a top stocks to watch perspective, we look at sales growth more than 10%. These are some great stocks with a solid sales growth. I love these stocks. And we look at profit margin more than 10% and free cash flow more than 500 million. These are stocks with great free cash flow here, and cash on the balance sheet more than 500 million. These are rock solid stocks you could buy here and go from there. All right, now let's look at the most beaten down stocks here. Look, top of the list, it's sorted by market cap, as you can see here. You got biggest, baddest stock at the top here. Look, we got Apple at the top. Apple has got $2.3 billion market cap. And look, even up here, look at the expectation for the future here. It's expected to grow 6.6% from an earnings growth perspective and 5.6% from a revenue growth perspective. It's a good one here as it slowly makes its way higher. Look, it's in one day it's up 3.2%. You can comfortably buy some Apple up here. And what interests me more is I typically look at this next year EPS and revenue growth here. I really like the ones which have double-digit EPS and revenue growth. That's why, I'm more pumped up on Microsoft here at these levels. Look, Microsoft has got double-digit revenue growth as well as EPS growth. That's a bigger bet or a better bet than Apple here, and also has a nice overall score of 81, which is computed using profitability and margins and growth and financials. So that's why it's a better bet here. I also like Google. Google is even better than Microsoft, as you can see here. This one has got even better EPS growth and better earnings growth. You could buy this great company. Also, overall score is much higher. It's 94. That's one of the reasons I always look at the EPS growth and revenue growth. I want companies growing their earnings and revenue and double digits. And say no more here, we got Tesla. Tesla is even better than Google here. Look, these guys are supposed to be growing at 29% clip when it comes to earning and 34% clip when it comes to revenue. That's why I like Tesla. I would be buying them on down days and go from there. And look, we got one more here, one of my favorite, MasterCard. This also has got nice expectation for the future here. 20% EPS growth and 17% revenue growth, even better than Visa. That's a good one to buy here. And we got a few more, keep watching here. We got Lily and NVO. Both are my favorites. Look, NVO has got better EPS growth and revenue growth. I would be buying NVO. It's a good one to buy here. And we got a few more here. Look, we got Adobe. Adobe has a great EPS growth and revenue growth. You could buy Adobe at this beaten down price here and go from there. And we got AMD, one of my favorite here. Look at the growth here for the future. Nice 13% growth in EPS as well as revenue. Great one to buy up here. And we got Caterpillar. Look, it's down, beaten down big time here. Nice growth here. Both Caterpillar as well as Deere. You could buy both of those here. All right, so list goes on here, and before I go any further, let's cover two things here. By looking at Apple here, you could play spread game here. Given stock is down here, trying to bounce back. Look, in one day we had 3.2% gain. Stocks like Apple, you could do a spread play here. So let's hop on to Thinkorswim platform. We can do a quick spread and go from there. All right, let's bring up Apple here, my favorite company, AAPL. Look, Apple stock is at about right here. Look, it's about $147, and we got a 2-year chart, as you can see here. And if I go here and look at the support level here, you could argue this is a good support level right here around $125. So once you identify your support level here, it tells you it cannot go lower than that. So I could do two things with Apple here. I know Apple has got a nice support level around 135. I also know Apple is going to bounce from these levels, so I could benefit from both ways here. So in these type of scenarios, my option strategy is going to be, one, I want to play stock going higher. I would typically go maybe 96 days out, as you can see here. Right now stock price is 147. I could go here around 147. Look, 145 is close, depending on how much money you have. For example, you don't have too much money, you are just starting out. So in that scenario, I would just do a $5 wide spread. For example, I do this here, go here, buy a $5 wide vertical here. So instead of buying Apple by paying so much money, $147 per share, with a smaller amount of money, you could control 100 Apple share. Look, what we're doing here is we are buying an Apple 145 call and we are selling Apple 150 call. It's just a $5 wide spread here. This will make sure your money that you pay is very less. Look, you're just paying $2.70 here, and it's a $5 wide spread. And if you confirm and send here, what it tells you is really you're buying a vertical spread. It will expire. You have a lot of time here, 96 days out. And you are paying your max loss here, which is $270 you're paying, but you're making $230. It's almost double your money, not quite. You're actually paying $270 and making $230. So you're making some money, almost double, not quite. It's one of the good strategy here. I'm sure Apple will go higher. So you could execute such strategy here with a very low capital, $2.70, and you'll make good money here. You will make $230. And if Apple stays above 147.70, which is slightly higher than the current price, you will break even. So it's one of my favorite strategy. So this one you could employ if you don't have too much money in your account. But say you have little more money, you want to take a little bit better risk here. What you can do is you could go a little higher. So you could go here instead of 145, you can take 140 here. So that way you got some more thing. And instead of 150, you could go to 160 here. So you're taking a $20 risk, as you can see here. There you go. You're taking a $20 risk. Stock is about around 150 right now. You are buying a 140 call. You're selling a 160 call. The reason we do it is really this 160 call that you are selling will bring in some money, so you can finance it for your 140 call sale here, purchase here. So that's the reason we are doing. So you can do this here. You can confirm and send, as you can see here. The moment you do this, what you're doing is, look, you are paying $1,000. That's your the amount that you're paying, but you're almost doubling your money. You're making $997. So, just by, if you were to buy 100 Apple, look, you have to pay $14,000, but now you're controlling 100 Apple just with the $1,000 here. If Apple goes higher, your max profit here is $997, and your break-even price is $150, which is slightly higher than the current stock price. And you got here about 3 months of time here. In 3 months, who knows, Apple can go much higher, and you could make this entire money here and go from there. So this is one of my favorite way. I do this all the time. When the market comes down big time, I do it on stocks like Apple, Tesla. I do it on big ETFs like SPY, QQQ, because I know in the long term, well-run companies and well-run ETFs will always go higher. All right, so this is one way, right? So you could also do one more thing. To finance some of these sales, you could sell some put option. So what I typically do for stocks like Apple, I would go like say 47 days out, which works out pretty well. And you could sell some put option. Right now, look, Apple stock price is about 147. All-time low is 182. That's the all-time low. And it could even go below that. Look, there is nice amount of money to be made here at around 120 here. If Apple goes to 120, call me a buyer. And the chance of Apple going to $120 by July 1st is right here. We got probability of touch here, 26%. I'm pretty much comfortable there. I could go here and sell a put option right here and make $1.20 here, which is $120, and confirm and send here. I do this all day long here. It's one of the good way you can make some money here. If Apple comes to 120 by June 1st, call me a buyer. I love Apple. I could buy it. But look here, buying power reduction is also not too much here, just $1,200 or so. I would confirm and send and go from there. So I do this all along, with the even bigger stocks like Tesla. Let's quickly bring up Tesla here. Look, we got TSLA, Tesla. You're wondering, Tesla is a big product. Should I do something here? What I would do is, if the stock is down, I would go here, go 96 days out here, and look, Tesla is at 769. So right now, as I go down here, 769. Look, 760, 780. So I would, basically buy this spread here, 760, 780 here, and go buy vertical spread, 760, 780, $20 wide spread. I pay $10 here, which is $1,000. Look, this is one of the best way. You don't need to worry about the big stock like Tesla. You can take advantage of upward move here. What I'm doing here is I'm buying a Tesla at look here, 760 call. I'm selling a 780 call, and 780 call will finance my 760 call to some extent here. So look, I'm at this time I'm paying $1,000, and I'm making $990. So it's almost double your money type trade here. I do this all along, especially for the good stocks on the down days, and they will bounce back, and you can take the profit off the table. It's one of the better ways. But you want to finance this this one further, you could sell some put option under current stock price here. You could go here. Look, when you sell put options, you would go 40 days out or so. Tesla, look, $769. You could go all the way down here. If Tesla hits 350, call me a buyer. Chance of that happening is 10%. By June 1st here, I would sell a put option right here at 350. I make $252 here. Confirm and send. Look, I'm making $252 by selling a put option on Tesla here, and Tesla is at 769. Chance of Tesla hitting this price is very, very, very low here. I would confirm and send and go from there. This will finance some of our call spread purchase, and it's one of the better way to do it. All right, now let's jump back here and look at the list here. So I took a few examples. You could do this for many of these stocks here. These are rock solid companies. You could do it for many of these stocks here. All right, let's jump in here and look at the continuation here. Look, from a continuation perspective, you got great stocks here. As usual, keep a watch on IV percentile here. I added this just to make sure you get a good idea on what are the high IV stocks here. On high IV stocks, you could employ a lot of strategies. We'll talk about one more strategy as you go forward. And look, we got Intuit here, completely clobbered, as you can see here, trying to go higher slowly. So right now stock is at, look, it's at $371. You could employ some good strategies on stocks like Intuit. Just for the chuckles, let's look at Intuit here and see if we can employ some strategy in Intuit. So let me take you back to Thinkorswim platform from TD Ameritrade here. Let me cancel this here. Let's bring up Intuit. Look, Intuit. Right now Intuit is let's go to chart here. Intuit is, as you can see here, coming down big time. Looks like there's a nice support level around 320 or so here, right around 320. So we could employ some strategy here to take advantage of Intuit going higher. So I could go here, and typically this spread is called a back ratio call spread here. I love this strategy. It will help you when the stock when the stock explodes higher. So right now stock price is at 371. I could go here. I could go around 360, as you can see here, which is below the current stock price. I could just go here at 360 and basically buy a back ratio spread here. So what this does is, as you can see here, I'm buying one 360 call. I'm actually selling one 360 call, and I'm buying two 370 call. As you can see here, I'm a net buyer here. Because I'm a net buyer, I'm paying $37.80 here. And you might wonder what the profitability of this. You could go to Thinkorswim platform here. You could go right here, analyze the trade. As you look through analyzing the trade here, let's go into the profitability here. Right here to the risk risk profile here. As you look through the risk profile, we got our Intuit here. You could adjust your you could set this parameter here and say set slices to break even, and you could also choose a date here, 9/17, and go from there. Look, we got 370 call. We got the call spread, back ratio spread here. Your maximum loss is at 370 right here. If the stock stays here, you will lose, but as the stock goes higher, you'll make a lot of good money, as you can see here. And if the stock goes even below, you'll not lose money, but your maximum loss is at 370, as you can see here. I'm pretty much comfortable with this here. I could go back to my trade tab here and confirm and send. As you look here, this is really an aggressive strategy. We want Intuit to surge higher. That's why we are doing this a back ratio spread call here. And look what's going on here. Right now we got here, we are paying $3,785 for this sale here. So Intuit is a huge product, as you can see here, but we are not paying too much. But as stock goes higher, look at my max profit. My max profit is infinite here. That's why a lot of people will put less money and make a lot of money. This is one strategy they use. I love this strategy. I use this strategy especially on the great stocks with nice profit margin and nice future. You could employ this strategy when the stock is down. On Friday stock is up, but typically I do it when the stock is down and when the volatility is very high. This is a high volatility strategy. You could employ this strategy. All right, so let's go back here and go into our spreadsheet. You could employ this strategy on many of these stocks, as you can see here. And look, my favorites are really keep watching the EPS here, EPS growth and revenue growth here. I like the double-digit EPS growth and double-digit revenue growth. Stocks like Intuit and AMAT ticks the box there, nice double-digit here. I like those. As you look through here, got a few more with the nice double-digit here. Look, we got Intuit Surgical, one of my favorite, nice double-digit here. Even Micron ticks the box that you could go after Micron also. And we got one more with the explosive growth here. Look, we got Fortinet, one of my favorite here. You could take a look at Fortinet also. Nice EPS growth and nice revenue growth. And we got one more Autodesk, one of my favorite. We could employ same strategy here. It's also a good one to buy here. All right, let's continue on here. We got more stocks, all profitable. Look at the net margin here. All these have got net margin more than 10%. And also keep watching here. These guys have got a lot of money. Look at the cash and free cash flow. Both are positive. That's why I'm comfortable employing some of these option strategies, like selling put or put spread underneath and buying call spread at the money. So you could make some good money if you keep doing such activities on these stocks here. And keep watching the profitable next year revenue growth and EPS growth. I like the one with the double digit here. Look, we got one right here, Lululemon, one of my favorite stock here. You could take advantage of that and buy some Lululemon, and even Cadence Design. And we got many more with the double digit. We got one right here, Arista Network, one of my favorite here. You could employ same strategy here also. All right, so with that, when the stock market is in an extreme fear zone like it's right now, it will get better slowly. So we don't need to worry too much. A lot of the bad news is in the market right now. So that tells you, dawn is nearby and stock market will start going higher slowly. And at this time here, when the volatility is high, buy quality stocks with the sales growth and positive gross margin, you will do very well. And go after the wealth builders. We got Apple, Microsoft, Visa, MasterCard, and so on and so forth. Go after the wealth builders. You could buy the stock outright, or you could employ some option strategies that we talked about. We talked about the call ratio back spread, which is one of the great strategy for explosive growth. And you could also sell some put option underneath and make some money that way also. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.